is not pinching you. RBI is telling you. Like, see, when one of the 12 public sector banks get a penalty, it's a news. When all the 12 public sector banks get penalty, it is not a news. Okay, this year I made 1,000 crores profit, I'll expect 5 crores penalty. This kind of mentality sets in. So, regulator is very serious now, very, very serious. And I think changes will come the way in which penalties are used, penalties are levied. Probably, the penalties may be astronomical also to go forward, because penalties are basically deterrent effects, no? This is one thing. Second thing I'll tell you, in any organization, compliance is accepted only because of regulator and regulation. Nothing beyond that. It's a bare fact. Right? I remember some 20 years back, I was working in the same head office in junior level. One guy used to come, sir, this is regulations, sir. We have to send this compliance today, please. Like that. But today, he was a junior level officer also, in charge of compliance. But today, banks are having chief general managers and general managers as compliance heads, only because of regulators' insistence. And compliance over a period of time has evolved. And even today, compliance risk assessment varies from organization to organization. How do you take a certification? How do you measure compliance? How do you report to board? And how do you ensure sustenance of compliance? It is still evolving, I'll tell you. And today, I'll tell you, we don't have a very, very credible tool in Indian financial landscape, particularly for compliance, because most of the softwares or tools available in the market are oriented towards mostly AML KYC compliance. You have to integrate the transaction compliances separately, and other regulation-based compliances separately. And if you look at, today we have developed a model, we have a very good model, where I take a quarterly submission from all the branches, where I post minimum 197 questions to the branch, asking them to say yes or no. And I very well know I can put 1,200 questions to any small branch, that these are all the compliance pointer, whether you have done it. And one final thing I am telling you, this year my bank has taken a decision to give certain marks in appraisal of officers starting from lowest level. For that, now I have to give weightage to the compliance points. We are into that task. Yes, it is evolving, very interesting. Probably you come down for a cup of tea with me to my office, we will discuss. Now Ravi is totally impatient. I cannot go beyond this. Thank you very much.
Yeah, thank you, sir. Your address has covered the context for today's sessions, covering both business and the regulators' expectations from the internal audit fraternity. Now we are going to witness the book release function. So the book is titled Fraud Prevention and Detection Through Internal Controls, co-authored by K. Vidyadharan, Sana Bakai, and Naval Kishore Bajaj. So I request Naval Kishore Bajaj sir to join the dais. And I request Mr. K. Vidyadharan, co-author of the book, to share a few words about the book.
Chief Guest, Mr. Suresh Kumar, GM and Chief Compliance Officer, Indian Bank. Madam Uma Prakash, Senior Vice President, IIA India, other dignitaries on the dais, off the dais, eminent speakers in this conclave, delegates, ladies and gentlemen. I have a pleasant duty to tell you how we conceived the idea of writing a book on fraud prevention and detection through internal controls. As we all know, there is a framework on fraud risk management which talks about fraud triangle. Fraud triangle says 3 elements should be present for a person to perpetrate a fraud. What are these 3 elements? Number 1, opportunity. Number 2, pressure. Number 3, justification. Opportunity. There is an opportunity to commit a fraud if the internal controls are either absent or weak or inadequate or ineffective. There is an opportunity. Coming to pressure, if the person is burdened with heavy debts and liabilities and his lifestyle is lavish and he has all vices, bad habits, he needs lot of money. So he wants to earn by hook or crook lot of money. That is why he is committing a fraud. Justification. The person, employee feels he is an excellent worker, hard worker, but he is not being paid salary adequately. He thinks that his boss sitting in the corner room is enjoying all the benefits, enjoying the fruits of his labor. That is why he feels that he should commit a fraud and earn his own money. Now, out of the 3 elements, second element is present. That is, pressure is there. Third element, justification is there. But first element, opportunity, is not there. That means it is very difficult for a person to commit a fraud. There only our book comes in handy. You have to make the internal controls very strong, very effective, and adequate. There, in our book, we are giving number of internal control aspects: preventive control, detective control, corrective control, everything for various functional areas. Take, for example, inventory, payroll, HR, procurement, cash and bank. Every area we cover in that book. So that will be very useful for all of you. This book has been written by 3 authors. Myself and Ms. Sana Bakai. She is here. Please stand and get recognized. She is from Delhi, practicing chartered accountant from Delhi. The third author is Naval Kishore Bajaj. He is from Bangalore. He is the head of risk management and internal audit for Yokogawa India Limited from Bangalore. A question may arise, why 3 authors? Please sit down. Why 3 authors? See, I am a strong believer of team effort and teamwork. Team means T-E-A-M. Team means together everyone achieves more. Also, mathematics, in mathematics, 1 plus 1 is equal to 2. But in management science, 1 plus 1 is more than 2, 3, 4, like that it goes, depending upon the synergy it creates. So, if more than one mind joins together and performs a task, fantastic results can be achieved. That is why we are 3 people for this book. Our book is a small one. Always we say small is beautiful. Nowadays, everybody wants everything in a jiffy. They don't want to read a voluminous book of 500 pages or 600 pages. That's why we have given just 100-page notebook, 100-page book, giving all the details. Last but not the least important, I would like to tell you that there is a foreword in the book. 3 eminent people have written the foreword. Before reading the book, you read the foreword. It gives everything in a nutshell, a bird's eye view of the book. 3 eminent people are: 1, Mr. Amarjit Chopra, past president of Institute of Chartered Accountants of India. Number 2, Mr. Anil Sharma, NEFRA member. And third one, Mr. Tyagarajan Kumar, Chief Internal Auditor of Times of India Group. And I want to give an attractive offer today. Those who are buying the book today, they will get 50% discount over the MRP. It is available at the registration desk. So you can pay by cash or GPay or check by which you can buy. Finally, with this, I thank IIA India on behalf of all the three authors for publishing this under the banner of IIA. Thank you very much.
Thank you, sir. So we have message from IIA India President, Mr. Aditya Bhatt, which will be delivered to us by Ms. Sana Bakai.
Good morning, everyone. Mr. Aditya Bhatt could not join us today. He sent a message for the release of the book. I'll just read out the message. Greeting to all participants and organizing committee at IIA India Madras chapter. It is unfortunate I'm unable to attend today's event in person due to inauguration of IIA India's office at Mumbai, a dream of all IIA members, which has now become a reality. The topics to be discussed today in the Fraud and Forensic Conclave are pertinent to the current environment, and the ingenuity of the fraudster have assumed large proportion on account of limitation, restriction during the pandemic period. While bigger companies had the relevant infrastructure and financial strength to cope up and respond, companies in MSME sector struggled and will continue to struggle without affordable guidance and mentorship. I'm so very happy to see IIA India has released a guidance note today on fraud prevention and detection through internal controls, specifically to the SME sector. A big thank you to all very own and vibrant K. Vidyadharan, Sana Bakai and Naval Kishore Bajaj for taking their valuable time out of their personal time for a selfless cause. I'm positive this publication will be soon to be a boon to this sector. I also humbly appeal to other participants here today to offer their support to IIA India to publish such thought leadership articles. Thank you all for attending today's event, and I'm sure it will be an enriching experience for all. Have a great day, take care, stay safe and be kind, and all the best for the conclave. Thank you.
Sana, I request you to read out the message from Mr. Bharat Garg, on behalf of the publication committee.
We have another message from Mr. Bharat Garg, Chairman Publication Committee, who could not also join today. He wrote, the Publication Committee of IIA India was revamped in July 2020 during COVID times. And then we, along with Chief Editor Sana Bakai and our guide and advisor, Mr. K. Vidyadharan, decided to upgrade the quarterly newsletter to IIA India to a monthly digital magazine. And the first edition of the internal audit today was published in August 2020. Since then, we have come a long way, and today our magazine has a readership of approximately 25,000 internal auditors and risk professionals across India and other neighboring countries. Apart from monthly magazine, another key objective of publication committee was to support authors and publish research papers and books which are relevant and contemporary for members' use. And today it gives me an immense pleasure as IIA India is releasing book Fraud Prevention and Detection through internal controls. The book has been authored by seasoned professionals, Ms. Sana Bakai, Mr. Naval Kishore Bajaj, and K. Vidyadharan. I got an opportunity to read the book earlier, so must mention that this book is backed by comprehensive research and captures all aspects of fraud mitigation in a very lucid and a practical manner. Professionals, particularly whose work for SME sectors, can immensely benefit from the knowledge imparted by this book. Congratulations to all the authors for such a great piece of work, and wish lots of success for this book. Further, on behalf of Publication Committee IIA India, I invite you to come forward and join hands with us. We look forward to your feedback, suggestion, and comments. And also, if you have a flair for writing, Publication Committee will be happy to support you in all possible manner. Thank you and happy reading. Thank you.
Thank you, Sana. So now I request Mr. Krishna Chaitanya to share his commentary about the book.
Thank you very much, Deepika, and a very good morning to all. So first of all, I'd like to thank Mr. Suresh Kumar to be with us today and deliver a very insightful and inspiring keynote address. Also take this opportunity to quickly thank Mr. Ravi, Mr. Manian, Ms. Uma Prakash, and my colleagues Arun Balaji, Sandeep, and all of them who worked very hard to make this program possible. And when I think they say that we're always out of time to prevent fraud. Like that, I think we're also out of time in this session, so I'll make it very brief. And one of the key things about this book, if you see that, and Mr. Suresh Kumar was talking about in his keynote, it's very difficult to deal with the fraud after it has happened. You know, once it has happened, it's so much more difficult. It puts so much more pressure on everyone in the system. And that, in that context, when I saw the book that the eminent authors have authored, you know, Mr. Vidyadharan, Ms. Sana Bakwai, and Mr. Naval Kishore Bajaj, excellent, that they have actually crystallized their wisdom and knowledge in a very concise form, very easy to understand form, which young professionals can easily absorb and implement in their audit activities. So this book is actually talking about preventing and detecting frauds. So if this right internal controls are implemented, I believe it will go a long way in minimizing the risk of fraud. And goes back to one, on a lighter side, a statement made by one of my eminent colleagues in IIA. You know, we can do a lot to prevent fraud. We can do a lot of preparation to prevent fraud, but fraud will happen on its own schedule. Okay. While that's one way of looking at it, a lot of internal controls, by putting in the right internal controls mapped to the fraud risks, the risk of fraud can be minimized. And also you'll all appreciate that internal controls as per the Companies Act under Section 134 not only requires efficient or orderly conduct of business to be achieved through internal controls, but also the prevention and mitigation of fraud, detection of frauds. So from that perspective, also this book becomes very important. And one other thing is that from an SME perspective, while the book is authored from an SME perspective, like the keynote speaker also mentioned, I think it's got applicability to other companies as well. And I think it will really help the professional community, especially young aspirants. With that, I would like to thank the authors and for taking their personal and professional time out to author this book. And thank IIA Madras and IIA India for enabling them in publishing this book. Thank you very much. Thank you.
Thank you, sir. Thank you, sir. Thank you for sharing your quick views. Now we are going to have the release of the book. A book is going to be released by Ms. Uma Prakash, and the first copy will be received by our chief guest, Mr. Suresh Kumar, sir.
A warm good morning to all of you. On behalf of the Institute of Internal Auditors, All India, I know I am the last speaker now other than the vote of thanks, so I am also pressed for time, but still I would like to make 2-3 vital points before that. And thank you for attending in good numbers for this conclave. And this was organized, actually when we had a Women's Forum conference 2 months back, Arun came and requested, can IIA do a similar program at a smaller scale, exclusive for the forensic group from Ernst & Young, Arun Balaji. So I said I was overjoyed and thrilled about it. Okay, someone is asking IIA Chennai to do a program, and we should be more than happy to do one. And I never thought that it's just going to happen within probably a month's time, and we could really make it, thanks to all the Chennai chapter BOGs and the contributors. Really, it's a great effort. I would first like to appreciate that. Point number 2 is about this book again. There is a story to this book, because Mr. Vidyadharan, who was the main author, and of course the other 2 authors also, they were all requesting the Women's Forum that it has to be released during the July 2nd conference, because it was a larger crowd. And because of paucity of time during the inaugural session, already it was overstretched by more than an hour. I said, it's very difficult, sir, can we not have a better time to do it if it is okay with you? And I think now today we are fortunate to release it this time, because it's an exclusively forensic program, and there could not be a better time to release this than this. So I think probably that is why it happened like that the other time, and now we got this opportunity to release at this August crowd. So very happy and privileged to do this now. And about this book, of course, many have talked, so I don't need to talk more about it. The only thing is, today morning, Vidyadharan just said probably can talk 2 minutes about the book after going through the book. But then when I really started reading that copy, the PDF version that he had sent, I was so engrossed. It is so lucid and so practical. Even for people who already know about it, you feel so interested to read about it. It's a recap for the people who already know about it. And for the people who are beginners, for the SME sectors who have just started their business, it's a beautiful Bible, I would say, for prevention through internal controls. All the aspects across the supply chain in an organization, be it a small or large, the concepts are the same at the end of the day. Probably the magnitude is different. So that is what is being covered for all the process in a good supply chain form in an organization. And it's a very interesting book to read. This is about the book. I thought I would really compliment the three authors, Mr. Vidyadharan, Sanabaka, and Nawal. It's a great effort. And we want more contributions on behalf of all India. I'm also requesting all of you to release more such books in future during this year. And just one more point. Thanks to Mr. Suresh Kumar. He was really appreciative of the internal auditors. Thank you very much, sir. And we assure you that we will be more not audit-centric alone. We will also address the customer-centric, and we will release, and we will be more proactive to your requirements. We assure you on behalf of the internal auditors, sir. Yeah. And to Mr. Vidyadharan's talk, I just want to add one thing. He was mentioning all the time that whenever a person does a fraud, he does this, the three triangle, opportunity, pressure, rationalization. I just wanted to make a small difference. It's not just he alone, it's a he stroke she. Because now especially the frauds are perpetrated more and more. And of course, there are more from the more genders, even though I am also from the other gender, but I wanted to say that also. So it's a common thing to everyone, and everyone should be aware of it. Thank you very much.
First copy will be received by Mr. Suresh Kumar, Chief Guest.
So the first copy is being received by our chief guest.
I think that entirely is the first copy.
Stuck.
No, they're nicely packed. Perhaps they can use this.
No, it's okay. It's okay. Just 1 minute we want it. It's no problem. Done.
We are quickly having a photo session.
It's enough. One more for me. Thank you, Chennai chapter, for giving this opportunity.
I think we can disperse. Please come in. Beach mein आइए. Please.
Thank you. Thank you, everyone. Yeah. So I request.
All of you, please.
அது எடுத்துரு. Thank you, everyone. Yes, sir.
Since I had the preview of the book and during my speech I was telling that we'll explore possibility for buying, his 50% discount really encouraged the banker. I'm taking 100 books today.
And we'll send it to your office.
100 books.
Yes, yes, sir. Great. Sir. Thank you, sir. Thank you very much. So I request Mr. S.K. Rangaswamy, sir, Chapter Vice President, to deliver the vote of thanks.
Podium. Thank you, Mr. Suresh Kumar, for your inspiring speech. And some of the few takeaways from my point of view is I totally agree that fraudsters are always 2 steps ahead of us, and you always end up playing a catch-up game. But what matters is the time within which the fraud is detected. That is what makes, yes, it is always desirable to eliminate frauds, but again, as Krishna mentioned, fraud has got a certain schedule. And it will happen irrespective of whatever controls we have. The proof of this one is lies in the time to detect the fraud. If it takes longer, then the organization is impacted very, very badly in terms of financial, reputation, compliance, so on and so forth. And I also resonate with whatever you said, because I've also sat on both sides of the table, one from an internal audit head and also from business, meaning I've handled finance, health underwriting, and so on and so forth. And you've also nailed the fact that compliance is seen as a necessary evil by the business team. And in many instances, compliance is the last team which comes to know of certain things happening in the company. It's primarily because of business pressures, but it's always better to take internal audit and compliance through the journey rather than running to them at the time when something goes wrong horribly. And of course, we look forward to you joining our community as early as possible. And with that, I would like to end this vote of thanks with a big, big thank you for participating in this event.
Sir, we'll give out the memento to the Chief Guest.
And I would request Mr. Ravi Raghavan to come and hand over a small memento as token of appreciation.
Thank you, everyone. I request Mr. K. Vidyadharan to introduce the speaker.
Management. I request the speaker of the day, Mr. Sandeep Baldava, to come to the dais. And Mr. Aditya Bhatt to come to the dais. It is my pleasant duty to formally introduce Mr. Sandeep Baldava. He is a chartered accountant, certified fraud examiner, and certified information systems auditor by qualification with over 25 years of professional experience. Over the last 2 decades, he has led forensic investigations, fraud risk assessments, and anti-corruption review engagements for companies headquartered in India, US, Asia, Europe, and Africa. In his role as an international peer reviewer, he has performed reviews on forensic engagements across the globe, giving him unparalleled experience in this field. His forensic experience spans across sectors and business functions, from deciphering complex forex transaction frauds or revenue recognition frauds to unraveling fund diversion, corporate loan defaults, to cracking recruitment fraud schemes, to uncovering conflict of interest situations. He has deployed his forensic skills widely to crack complex cases. He is also a co-author of a book, Forensic Investigation and Fraud Reporting in India. I now introduce formally Mr. Aditya Vikram Bhatt. He is a partner with AZB and Partners, a legal firm with over 19 years of experience. Aditya Vikram Bhatt's core practice is dispute resolution, shareholder litigation, including oppression, mismanagement, and corporate control disputes, form a significant part of Aditya's practice. He also has a significant white-collar defense practice. Aditya advises clients on corporate fraud, anti-bribery, and anti-money laundering, and other white-collar offenses. He regularly appears before various judicial fora across the country, including the Supreme Court of India, High Courts, and the National Company Law Tribunal. With this introduction, I now request Mr. Sandeep Baldava to proceed with this presentation. Thank you.
Be here, Aditya. Aditya. Thank you, Vidyadharanji. Good morning, everyone. Good morning, everyone. Good morning, everyone. Good morning. Come on, you are in a forensic session, so you'll have to be active. And the fraudsters are active all across, so we'll have to be more active all the time. Thanks, Uma. Thanks, IIA Chennai, for inviting me for this, session. So I think it's always a pleasure. I think I'm coming back to Chennai after 3 years. I used to come almost every week before that. But during COVID, I think stopped, and now I'm coming after 3 years. So good to be back amongst all of you. I will directly jump into the sessions, and then what I thought I would do is that I think considering the background of this audience, whatever I understood, so I'm not covering any of the standard topics, which I'm sure all of us are by now aware of, how different frauds are happening, etc., etc. So I'm covering some new angles that have emerged in the last 3 years, especially the regulatory angle, the compliance, angle, and also some new age frauds that are, happening. I'll take a couple of, case studies and then discuss those. And how, as chief internal auditors, chief financial officers, or CXOs in general, we need to be aware of what's happening around us and then be proactive in addressing these risks is what we will cover over the next half an hour. So if you look at today, you scan through any financial newspaper or a financial website, you will find almost on a daily basis on page 1 or max page 2 or page 3 that some corporate has been raided, SEBI has instituted some action, SEBI has levied some penalty, or CCI has done a dawn raid, CCI has levied a penalty, or an enforcement directorate has done a raid, income tax has done a raid, GST authorities have done a raid. So almost on a daily basis you see a regulatory action that is happening. So there are 2-3 things that have happened in India over the last 5 to 6 years. One, most of the laws are amended today in order to first formally capture and recognize the concept of fraud. There was no definition of fraud that was there even under Companies Act, the prior Companies Act. In this Companies Act, under 447 explanation, they have incorporated the definition of fraud. Similarly, in other areas, they have incorporated the definition of fraud to first cover that. The second thing that has happened is the powers that have been given to the different enforcement authorities to go and catch first what is the wrongdoing that is happening and then take action. That has also substantially changed. Third thing that has happened is earlier we would have never heard about an enforcement directorate coming to a corporate and raiding for a normal sort of a fraud. Right? So earlier it used to be mostly in a terrorist financing, money laundering, those kind of issues. But in 2018, the finance bill amended the Prevention of Money Laundering Act, incorporated section 447 of the Companies Act within that. Now, which means that any fraud that is defined as a fraud under Companies Act can also be investigated by enforcement directorate. So typically today even an employee reimbursement fraud can also be investigated under PMLA by enforcement directorate. So that's the change that has happened over the last 4 to 5 years. Parallel to that, the other change that has happened is the regulators today are up to speed with all of us. Like Mr. Suresh said, that public sector banks today have evolved, are on par with any of the private sector banks today. Similarly, the regulators also evolved, enforcement agencies have evolved, and they are on par with all of us. Today, they have all the technology, all the tools to detect wrongdoing that is happening in the respective areas. Let's take an example of insider trading. Insider trading as a concept has been there for ages immemorial, but never, I think, got the right attention. But the insider trading, prohibition of insider trading law was amended in 2019, and subsequent to that, SEBI has a dedicated cell now to monitor insider trading. So what they are doing is they are picking up abnormal trades. So what is an abnormal trade? Let's say Naval never trades in a Yokogawa shares, but suddenly now he has bought 10,000 shares of Yokogawa, and within 5 days he has sold those shares. So now that is first, that transaction is identified as an abnormal transaction. Then what they will do is they'll pick up Naval's data, and they have access to all the data about Naval, whether the bank statements, telephone records, anything that he has done on the social media, everything is available with them, and they have implemented tools to identify those activities. Then from there, they are identifying how Naval, who is not related, at present he is related, but generally not related to the company, he has actually, sort of being in touch with somebody at the company in which whose stock he has traded with. So they are establishing a link through the WhatsApp, through the SMS messages, through telephone calls, through CDR, data, as well as through the bank statements. And that's how they are linking and identifying how you potentially use the unpublished price sensitive information in order to do a abnormal trade. So that's just one example I am giving. A similar process is being followed in income tax, similar process is being followed for GST. So wherein through technology, they are identifying abnormal patterns and investigating those abnormal patterns to identify potential leakage of revenue or potential misuse of power that has been given to either the corporate or the government officials. So that's one element that we see. The second element that we see is how some of this is impacting the industry as a whole. Earlier, it used to be that some instance happened in one of the company in an industry, it used to remain with that company. But now what we are seeing is, let's say in a pharma company, somebody is raided vis-a-vis the healthcare, professional payments that are, happening, and that happened just a few, weeks back. From that, then onwards, what we are seeing is everybody in the industry is now looking at that aspect because it can expand to them. So that's one angle wherein it's not just impacting one company, but it's also impacting the whole industry. A related element to that is most of the times whenever there are compliance issues, something that we can't do, we used to outsource to third parties thinking that we are safe. Even if third party does something, then nothing will happen to the organization. That concept doesn't exist anymore now. So in several of these cases, the third parties were first identified, and then from there they proceeded to prosecute the organizations as well. Let's take two examples which are in public domain. One pharma company in Bangalore, one infrastructure company headquartered in Mumbai. In both the cases, 3 employees in one case, 4 employees in another case were arrested for potential bribery. That was done in one case for a project approval, in one case for a drug approval, right? So now earlier these things were considered as pretty normal in the scenario that, we need to get it done, get a third party appointed, third party liaison agent will go, get that done, we pay them the fee. Right? Now, when the third party is caught and identified that it's not just a normal payment that has happened, but a potential bribery that has happened, it is coming back and hitting the corporate. As internal auditors, as I think CXOs, we need to understand these changes that are happening in the environment and make sure that our processes and our systems, as well as our audit procedures, are gearing up for these. I can keep going on and on this. This is just examples that I am sharing. They are close to about 400 cases just in last 2 years where different actions have happened across different industries by different regulators. So these concepts were not that common earlier. Now it is very common. And I'll also share one anecdote in terms of the whole fraud and forensic, how it has evolved. 25 years back when I started in this area, it used to be a hush-hush affair. In fact, till I think Satyam happened, it was a hush-hush affair everywhere. Nobody would want to talk to anybody about fraud. And in fact, when I used to come to Chennai earlier, people used to say, "Why are you coming to Chennai? In Chennai, there is no fraud." People are all religious. Nothing, happens over here. Of course, I have one of my largest team sitting over in Chennai, today. So now I think we are doing conferences on this. We are writing books on this, and we are talking about this, openly. So that is how this concept and topic has evolved over the last, 2 decades. Earlier, it was not that, easy. So we can keep going on and on. But I think the bottom line is the regulators are active, the enforcement agencies are active. The fraud is not just a topic that is, I think, internal for you. It is now necessarily an external topic as well, especially if it is material, and you would not know when it will come in public domain. So the old concepts that, it's an internal concept, I will do something, I will take an internal action and then go ahead with that may not apply today in the current environment. So if you look at even the courts have taken a very strong stance that economic crime is in fact more prominent and more damaging than the physical crimes, and Supreme Court has gone on record to say that because it impacts livelihoods of multiple people. A bank fraud happens, a bank collapses, so it's not just the bank and employee that get impacted, the depositors get impacted, we as citizens get impacted because our taxes increase, and which is what is used to fund the capitalization or recapitalization of that bank. So today the courts are also taking a view that economic crime is more serious than a physical crime. Then if you look at Competition Commission of India, I don't know how many of you are fully familiar with this. If you are not, I think you should start familiarizing yourself, because 5 years back as a concept, again, it didn't exist. Only liquor companies were bothered about it, or probably cement companies were bothered about it. But now I think it's coming in different sectors, and they have approvals to do dawn raids. And in several cases, and why I am using the word dawn raids is, in several cases what is noticed is most of the corporates or even the internal teams that are working, they are not familiar with the concept of dawn raids, how to deal with a official when they come. They are treating them like they would treat like any other PF or a ESI guy comes in. That's how they are treating them. That itself lead to an issue, because you are supposed to first of all treat them appropriately. So you need to understand that these changes are happening, and the way the regulators and enforcement agencies are working now is slightly different. In addition to using technology, they are also preparing themselves and then coming to your office premises. Today, a CCI, when they do a raid, they don't do a raid suddenly, tomorrow, thinking that I will on a surprise basis, I'll detect something. They are actually spending 1 year to 18 months understanding what is happening in that industry, what is happening with that corporate, what meetings are happening, which locations people have met. Like for example, in cement industry, they actually knew exact locations in Chennai, Bangalore, where marketing people have met, agreed on pricing, and then I think, they have the names of people for whom they need to collect data. And today when they are coming, they are not coming and asking for, give me physical copies of this data, that data. They are saying, I need a backup of your ERP. I need backup of your electronic devices, including laptop, mobile phones, server email backup, and any folder that you have where you are storing common data for different departments. So they have complete understanding. They are coming with specific names and following this process. Now, as again internal auditors, are we doing anything around this area? In very few companies I have seen that people are even looking at this area. Are you doing an internal audit on compliance with the CCCI regulations? I am not seeing that people are doing that, right? Because I think what happens is we are only doing still traditional areas and maybe some technology related areas. But in respective industry, there are new areas that are emerging which are of higher risk, where the fraud and compliance risk is very high. But I don't think every organization today is focusing and covering that. Then if you look at reporting, so that's another thing that has changed substantially. Earlier, again, it used to be an internal affair. Only if it was substantially high coming in public domain, then people used to report. But now there are multiple reporting requirements. Under Companies Act, there is a reporting requirement. Under CARO, there is a reporting requirement. Under SEBI LODR regulations, there is a reporting requirement. For fraud, as well as now SEBI is asking you to report on forensic audits as well. That again is an important thing for all of us to understand, that when you are doing a fraud investigation, you will have to do it in an appropriate way, make sure that all the ticks and boxes are covered, all the angles are covered, because you never know that the report that you are issuing as an internal auditor in that area would tomorrow will be with a regulator or maybe in public domain, as I think it is required under the SEBI, regulations on disclosure of forensic audit reports, right? In certain areas, you also need to disclose the report to the stock exchanges. Obviously, when you disclose to the stock exchange, it will come in public domain at some stage. So today, when you are doing an investigation, you be also mindful of the fact that one, auditors will come and ask you as internal auditors, how did you cover that area? If you had a whistleblower complaint, earlier the concept was that, oh, it's not material, it's just noise, so we need not look into it. Or people used to take a call depending on if a complaint against a star performer is there. So then some people will come together, do some exercise and then say that, oh, nothing is there. All those I think would not apply in the current environment, because you never know how it will come out in a different form. Because today's whistleblowers are different and they have multiple avenues to, sort of disclose. First, they will disclose to the company in most cases. If company is not acting, they will disclose to the audit committee. If the audit committee chair is not disclosing, they will disclose to the investors. Let's say a private equity fund or a public sector bank or anybody is an investor, they will disclose to them. If none of those are disclosing, then they are disclosing to the SEBI as well. And in several cases, they are marking a copy to the PMO as well. Right? So the whistleblowing today again has evolved in a different way, where earlier people used to put in a suggestion box or rarely report. Now you are finding that the next generation is completely different. They are not bothered. If they find an issue, they will just report, use an email. They are very smart. They will create a proxy email box through a proxy server. They will send that so that you can't detect. Right? So that's again a big change that has happened in the current environment. Of course, one caution that we always give is that the concept of materiality still applies in terms of reporting, not in terms of investigation. Investigation, we still advise that you should investigate every case, right? Because you don't know what is not material today might actually be material once you dig deeper into it. However, on the reporting side, obviously you need to be careful, because let's say you have discovered a 2,000 rupees reimbursement fraud. Now you would not want to disclose that. ICI guidance note also provides that only if it is material, then you need to disclose in the CARO. So if it is a fraud by KMP, then you need to again disclose. There is no, I think, again, concept apply over there. So that needs to be disclosed. Forensic audits, we already disclosed. But what is interesting about forensic audit disclosure is when initially the publication and the notification came in, it said all forensic audit needs to be reported. Then a clarification came in. After that, everybody thinks that nothing has to be reported. But that's not the case. You still need to report certain categories. So it's again advisable to look at what needs to be reported. Otherwise, tomorrow it will be considered as non-compliance. And the wording that is used in the notification is very clear. It says forensic audit by whatever name called. So you can call it special review, you can call it management review, you can call it process review, it doesn't matter. But if it's in the nature of investigation, you are supposed to report. UPSI, again, I think just to add one more point, insider trading, like I said, SEBI is monitoring. Now, the next level of monitoring. Stock exchanges last week have sent notices first to the top 1,000 companies to explain them what systems and processes have been implemented to comply with UPSI regulations, which is the POIT regulations. So now they are asking, earlier what they are doing is they are primarily going after the individuals who are benefiting from the transaction, because company rarely or never actually benefits from a insider trading transaction. It's the individuals who benefit. So they are primarily going after individuals and prosecuting individuals. But now a thought process has emerged, again coming from Western world, that if we penalize only companies, individuals, it will not help. We need to start penalizing companies as well. So how do you penalize companies? They are coming back and asking, how have you implemented these policies and procedures? Let me know how are you compliant with the POIT regulations. For example, show me a copy of your designated persons database. Show me an example of how you have complied with identifying the people who are covered persons. How did you notify the trading window closures for those covered persons? Like that, they are asking again different questions to confirm whether the companies are implementing or not. And whenever they are doing an investigation now, as part of the investigation, they are seeking data from the company, confirming whether the company has complied with the relevant regulations or not. So in a different way, they are reaching out to the company and asking for this information. Again, I don't know how many internal auditors are reviewing this area. Right? It is still given to the company secretary. They are saying that somebody comes, you give them 1 lakh rupees, they'll do the tick in the box and then go away. It's not something again that you need to, put it in the last, sort of corner. Please make sure that you bring it up and also notify internally within boards, because in most cases what we are seeing is that once SEBI comes into picture, then there will be panic all around. Independent directors will ask what was happening, etc., etc., etc. And believe me, in most cases they are coming back and asking, oh, why you didn't audit this area if it is a high priority and high risk area as an internal auditor. So now let's look at a couple of examples of fraud. So now social media monitoring. So I don't know, again as internal auditor, are we doing social media monitoring in terms of picking up any information that is available in public domain with regard to our organization that can be helpful for us to detect and investigate frauds. Let's take example of recruitment frauds. So recruitment frauds are back in business because the number of resources that are available in the market are substantially lower than the number of jobs that are there, and then people need to sort of be deployed over there. So all the old style things that used to be there in terms of modification of employment letter, fake experience certificates, fake salary certificates, all those are back in business in the last 2 years. And today I think what is happening is, in one case, just one company, that company of course recruits 8,000 people a month. We found that 800 people a month were having some element of fraud in the documentation that they had submitted. 800, right? And several of those we are able to pick up as a lead from the public domain, where some people wrote on the blogs saying that I attended the interview, and then after 10 minutes of that interview I got a call that I need to pay so and so amount, and I'll get a favorable rating, and then I'll proceed to the next stage of the interview process. If I don't do that, then I think I would not be considered for the next stage of the process. Now it was there in public domain, nobody picked up. People are monitoring more like customer related complaints, not necessarily fraud related complaints. And the next concept, or I think a case study, and then it'll come to the concept, is how people are doing fraud is slightly different, right? I mean, frauds have always been there. Typical recruitment fraud earlier was, you go to a recruitment agency has a connection with a recruitment person within the company, you pay amount to the recruitment agencies, they'll manage all the documentation, make sure that your CV is shortlisted for the interview through the internal recruitment person, you do the interview, clear the interview, and then you are on the job, right? Those were the traditional frauds. Now what is happening is slightly different. The old ones are still happening. The new ones are, one example which we actually got 2 cases in 2 different companies. A manager who is nothing to do with recruitment. The manager in a business function goes to a team member and tells the team member that this year, because of the situation we are in and the margins are not that great, costs are increasing, but revenue is stagnant, rates are stagnant, so the bonus won't be that higher, but you are my star performer, so I want to help you. So take this CV and refer this CV as part of the employee referral portal, and you will get 1 lakh rupees, which would compensate you for the additional bonus I would have generally given you as a star performer. So the employee is very happy, goes to the recruitment portal, submits the CV gets processed. Now who interviews? The person who actually gave the CV to the employee. He interviews this individual. Obviously he selects because CV is given by him only. The person comes on the board, joins the organization. 3 months down the line, the person who referred and this new employee, both of them are sitting at a lunch discussion table, and the new employee is somehow not happy with the manager, so he's cribbing about the manager. So the old employee tells that, no, he's so great, I'll tell you how he helped me. So then he explained the entire process, that your CV was given to me by him, and then that's how I got it. So see how helpful he is. So why are you cribbing about him? He said, sorry, I paid 2 lakh rupees to get into the organization. right? So that person paid 2 lakh rupees to somebody, through that the manager got in. Now, this kind of a fraud, you would not be able to detect through a normal process. Because nobody would imagine that a business manager is giving a CV to a junior who is submitting and then the person coming into the system. The other problem that we have seen in this entire process, I am just taking 1 or 2 examples because of the shortage of time, is the entire background verification process. In most organizations, the way procurement team negotiates with the background check vendor and brings him down to a 400 rupees, 500 rupees check on the background check, you can imagine the quality of check that is happening. People are just ticking the box. And there is so much pressure on recruitment and bringing people on board that even if you are having an orange background check report, people are pressurizing the background check vendors, oh, do this 1 or 2 steps and then convert it into green because we need people on board. That's what exactly is happening. Again, I don't know whether you are actually going and auditing that area. How many of you go back and audit the background check areas? Because people think it is outsourced, a third party is doing it, XYZ, the agency is doing it, so it should be fine. But I can guarantee you that you go back and check, pick up that as an area, you will find enough gaps in that area right now as we speak. The new areas again within this is impersonation. In COVID, it has increased because most of the interviews are happening online. In fact, people are joining at their home. The computers were sent at their home, so you would not even meet the person for 6 months, 1 year, or even 1.5 years. So the person who was giving the interview was different than the person who is actually joining. And there are multiple such instances identified. Again, are we auditing these area? Are we going back and checking whether as part of recruitment process, do we collect a photo initially? Do we take enough screenshot when a HR is doing an interview, when a business person is doing an interview, and then comparing it with the person who has actually joined? And then are we monitoring red flags after the person has joined? For example, person says, I'll never come to office. For whatever reason, I have this issue, that issue, I'll not come to the office. So those are the examples which you need to pick up on the impersonation side. Then moonlighting. Moonlighting, I think, is an interesting conversation that is happening in the industry, especially in the services industry, because on an average now it is estimated that 5 to 10% of the people in services industry, whether IT, financial services, others, they are doing moonlighting in one way or the other. And this has now been confirmed through actual cases. I'll give you one example. We were doing a due diligence on behalf of one services company on another one. And so we found that 300 employees of this investor company, which was supposed to invest, were moonlighting with the target company. So it came as a shocker to the board of the investor company, but 300 of them were actually moonlighting with the target company, right? So that's again a big issue. It's easy to do now because 80% of the population still is operating from hometowns or homes, and they're selecting shifts during this they will work if the shifts are available, or they are doing in a manner that they are managing in a way that it never comes out that they are doing moonlighting. So new areas again to pick up and then do reviews. So I'll just summarize and then I think hand over to Aditya in few minutes. So what we are seeing is new kickback models are emerging. Earlier, kickback used to be in cash, some gold, etc. and all. But now it is in cryptos. People are asking you to give kickback in cryptos. People are asking to give kickback in foreign exchange. Because the value of money is less, the bribe amounts have gone up. Both private as well as public, both bribe amounts have gone up. So give me in dollars. Because say 10 lakhs, here I need to carry so many, sort of bundles. Here I can just carry one bundle, so it will be 8 lakhs. One bundle will be 8 lakhs, right? So that is how I think, people are asking. Or my kid is, a lot of kids are today having education outside India. They are studying over there. Please organize to send funds over there. They are researching and telling you that you have a subsidiary over there. Through that subsidiary, you can organize the funds. So that's a new model that is emerging from a kickback point of view. Gifts and events to enhance sales, this was considered very normal, but depending on the industry, it's not normal. Plus, there is a PMLA angle that is being brought in, wherein they are not able to go after through a normal route. So agencies are saying that this is money laundering because you are diverted funds in your books, you are recorded as a genuine payment, but outside it is not a genuine payment. Or in several cases, in the books you are recorded that it is paid to say a doctor, but it is not actually paid to the doctor. It is visible in your bank statement that it has been paid to somebody else. So it is money laundering and not just a normal fraud. So that is how they are picking up. Marketing communications versus compliance requirements. This is again very interesting. So there are multiple cases today regulators are investigating wherein the marketing team has gone on record to the press, media, social media, everywhere, saying that, let's say an example, I have done this acquisition is $3 million, right? But they are saying that it is a strategic acquisition. It will get me into a different, zone going forward. However, the compliance officer has not classified this as a UPSI. So regulator is coming and back and asking, okay, by the way, all your other CXOs have said that this is a significant transaction, critical, but you are not classified as UPSI. Can you explain? Not acting on anonymous whistleblower complaints is not an option in the current environment. You should look at whistleblower complaints if those have some facts, if those have some patterns, if they relate with some of your own findings, you need to, I think, look at that. Don't put the anonymous whistleblower complaints in dustbins. Action of third parties does not impact us. Whatever you do or you cannot do, if a third party does, then you are responsible for the actions of the third party. In fact, now more and more cases are coming through the actions that are happening on third parties. One company identified where a third party was involved in some, say, improper transaction. Then that third party is raided and they identify who are all the clients of that third party, then go after those as well. So today you can't sit idle and then say that, oh, third party is there, we have ticked the box, done the basic